Good evening, everyone. So today's report, I'm going to discuss about the PFRS15, or the revenue from contracts with customers. When we say about revenue from contracts with customers, it is to provide one comprehensive revenue recognition model for all the contracts with customers to improve comparability within industries, across industries, and etc. So it means that revenue is recognized when the goods or services are transferred to the customer at the transaction price. Then there is a nature sa PFRS 15. It provides the principles in reporting the nature, amount, timing, and uncertainty of revenue and cash flows arising from the entity's contracts with customers. So naghatag sa mga prinsipyo sa pagkahitabo sa iyang kinaiyan or sa nature sa iyang kantidad o timing o kawalay kasiguraduhan sa kita makita sa cash flow. So before we discuss further on, let's define the terms muna. So revenue is the income in the ordinary course of business. So revenue is the total amount of income generated by the sale of goods or services related to the company's operation. Ang kaning revenue mao ang kinatibukang kantidad nakita sa mga inyong gipangbaligya or mabutang na inyong gihatagag serbisyo, or ang kaning revenue mo ni ang kinatibukan nga kita o ginansya sa usa ka kumpanya. So income increases the economic benefit during the accounting period in the form of an inflow or enhancement of asset or decrease in liability that results in an increase in equity other than contribution from equity participants. So in short, income is the earnings gained from the provisions of services or goods or from the use of assets. So ang income mo siya ang kita nga or gikitaan nga nakuha gikan sa paghatag sa mga serbisyo o mga butang o gikan sa paggamit sa mga kabtangan. PFRS 15 applies to the contracts wherein the counterparty is a customer. So unsa rin ang counterparty? A counterparty is a party on the other side of the transaction, as a financial transaction requires at least two parties. For example, ang two parties kay ang buyer or seller. Contract, an agreement between two or more parties that creates enforceable rights and obligations. So, contract, pwede siya ma-written, oral, or amplified by an entity's customary practice. So, ang written contract is a printed document that details what parties can do or cannot do. So, for example, agreements to pay from a person's estate. So, agreements to another for the death of another person. Agreement upon consideration of marriage and agreement of the sale of land or any interest in land. So, kani siya nga mga agreement gigamitan og oral contract. So, by spoken communication ra og ang kaning implied by an entity's customary practice. So gipasabot ani na ang mga naandang practice sa usa ka entity. Customer, a party that has contracted with an entity to obtain goods or services that are an output of an entity's ordinary activities in exchange for consideration. Pero I think kabalo na mo unsa ning customer kay halos kita yung tanan kay customer. So dili na ako siya explain. A counterparty to a contract is not a customer if he agrees to participate in the entity's activities wherein he shares the related risks and benefits rather than to obtain output. So it means na ang usa ka counterparty sa usa ka kontrata dili usa ka customer kung siya muuyon nga moapil sa mga kalihukan sa entity. So sa mga naay kalabutan ng mga risgo o mga benepisyo kaysa sa makakuha og output sa mga activities. PFRS 15 applies to all contracts with customer except lease contract. A lease contract is a contractual arrangement calling for the user, or referred to as the lessee, to pay the owner or the lessor for use of an asset, property, building, and vehicles or common assets that are leased. Insurance contract. An insurance contract is a contract under which one party or the insurer accepts significant insurance risk from the another party or the policymaker. by agreeing to compensate the policyholder if a specified uncertain future event or the insured event adversely affect the policyholder. Financial instruments. Financial instruments are monetary contracts between parties. They can be created, traded, modified, and settled. They can be cash evidence of an ownership interest in an entity or a contractual right to receive or deliver in the form of currency, debt, equity, or derivatives. So non-monetary exchanges between entities in the same line of business to facilitate sales to customers. For example, PFRS15 is not applicable to a contract between two oil companies that agree to exchange oil to fulfill customer demands in different locations on a timely basis. An entity recognizes revenue to depict the transfer of promised goods or services to customers in an amount that reflects the consideration to which the entity expects to be entitled in exchange for those goods or services. So, gila ang usa ka entity ang kita aron ipakita sa mga pagbalin sa gisaad na mga gibutang sa serbisyo sa mga customer sa kantidad na nagpakita sa konsiderasyon nga gipaabot sa entity nga adunay katungod baylo sa mga butang o service. So kanina part mo na sa pinaka-importante diri sa PFRS 15. Mao ang 5-step model for revenue recognition. Step 1. Identify the contract with the customer. Step 2. Identify the performance obligations in the contract. Step 3. Determine the transaction price. Step 4. Allocate the transaction price to the performance obligations in the contract. Step 5. Recognize revenue or as the entity satisfies the performance obligation. There's a step 1. A contract with a customer is accounted for only when all the following criteria are met. Number 1. Approval from both parties. So it means that all parties must approve the agreement. So this criterion addresses the fact that a contract is usually only enforceable once all the parties have approved it. Identifiable rights of each party. So it means that each party's rights are identifiable. So the arrangement must clearly identify the goods or services to be provided. If the performance obligations cannot be identified, then it is impossible to determine when the transfer of control has occurred, which is prerequisite for recognizing revenue. Identifiable payment terms. So it means that payment terms are identified. So as long as there is an enforceable right to receive payment in exchange for goods or services, the transaction price does not need to expressly stated in the contract. So the contract does not need to include sufficient detail that the price can be reasonably estimated. So when determining payment terms are identified, the entity should consider if there are any laws or legal precedents the customer could use to override the contractual obligation to pay. It has a commercial substance. It means that the contract must have commercial substance. So a contract only exists if the risk, timing, or amount of the cash flows to an entity are expected to change as a direct result of the contract. Considerations in a contract is probable of collection. So it means that collectibility is probable. So the new standard requires vendors to evaluate customers' credit risk at contract inception. So consistent with current guidance, a vendor can only be recognized revenue when the payment is likely to be received. Unless the above criteria is met, no recognition will be recognized. Any consideration received is recognized as liability and will only be recognized as revenue after the occurrence of. The entity has no remaining obligation to transfer goods or services to the customer in all, or substantially all. of the consideration has been received and is non-refundable. So it means na ang entidad walay nahibilin nga obligasyon sa pabalhin sa mga butang o serbisyo ngadto sa customer. Number 2. There is termination of contract and the condition is non-refundable. So adunay pagtapos or pag-end sa mga kontrata ug ang condition dili na ma-refund. So two or more contracts entered into at or near the same time with the same customer or related parties of the customer are combined and accounted for a single contract if the contracts are negotiated as a package with a single commercial objective. The amount of consideration to be paid in one contract depends on the price or performance of the other contract. So, the goods or services promised in the spirit contracts are single performance obligation. Some or all the goods or services promised in the contracts are a single performance. So, if promised jud ang good or services it is not distinct. It should be combined with other promised goods or services until they become distinct together. So, example in contract combination is if a software company enters into two contracts with the same customer at about the same time. The software and for the customer implementation of the software. So, the company may be required to combine these contracts. So, sa diri nga part, this permits vendors to combine contract that would otherwise not be combined in order to simplify the revenue recognition process. So this is only permitted as long as the result is not materially different from accounting for each contract individually. Step 2. Identify the performance obligations in the contract. So a contract includes promises to transfer goods or services to the customer. Each promise to transfer the following is performance obligation to be accounted separately. Kani siya urag sumpay ra ni siya sa combination of contract. So in this step requires an entity to identify all the distinct performance obligations in an arrangement. So a good or service is distinct when the customer can benefit from the good or service on its own with resources the customer already has access to. And the good or service can be transferred independent of other performance obligations in the contract. Even if it is transferred with other goods or services that are not considered distinct should be combined with the other goods or services until the bundle is distinct. The customer can benefit from the good or services either on its own or together with other resources that are readily available to the customer. And the promise to transfer the good or service is separately identifiable from the other promises in the contract. So diri sa una, the good or service could be used, consumed, sold for an amount that is greater than the scrap value or otherwise held in a way that generates economic benefit. Dun diri sa ikaduha, is not an input to a combined output specified the customer. It does not significantly modify the another good or service promised in the contract. It is not highly interrelated with the other goods or services promised in the contract. Step 3. Determine the transaction price. The entity has to determine the transaction price because this is the amount at which revenue will be measured. The consideration amount can be fixed, variable, or a combination of both. The transaction price is allocated to the identified performance obligations in the contract. So these allocated amounts are recognized as a revenue when or as the performance obligations are fulfilled. An entity excludes any future options for a contract from consideration when determining the transaction price. The entity also excludes amount third parties will eventually collect, such as sales tax, when determining the transaction price. So the transaction price is easy to determine when a fixed amount of cash is received simultaneously. So, with the transferred goods or services, so unsa din ang performance obligation? So, it is a promised good or service that is not distinct is combined with the other promised goods or services until a bundle of goods or services that is distinct is identified. In other words, the promise to transfer the good or service is distinct within the context of the contract. A performance obligation is a promise that is implied by the entity's customary business practices, published policies, or specific statements. If contract inception, the promise creates the valid expectation of the customer that the entity will satisfy the implied promise. So, performance also, this only includes the activities that involve the transfer of good or service to a customer, excluding the administrative task to set up a contract. Be aware that performance obligation can be both explicit or in the contract and implicit based on the practices or policies. If no transfer to customer, no performance obligation. Step 4. Allocate the transaction price to the performance obligations in the contract. So, the transaction price is allocated to each performance obligation identified on contract based on the relative as standalone prices of the distinct good or services promised to the transferred. So, there is a step 4. When a contract includes more than one performance obligation, the seller should allocate the total consideration to each performance obligation based on its relative standalone selling price. The seller must estimate the standalone selling price if it is not observable. If it is also does not prohibit any method for estimating the standalone selling price, as long as the estimation is an accurate representation of what price would be in charge in a separate transaction. The transaction does mention three acceptable methods: adjustment market assessment, expected cost plus margin, and residual. Ang adjusted market assessment approach day kay ano siya ang mga approach involves the entity evaluating the market in which it sells goods or services and estimating the price that a customer in that market would be willing to pay for those goods and services. While sa expected cost plus a margin approach, kay the entity forecasts the expected cost of satisfying a performance obligation and then adds on appropriate margin. So, naglangkop sa pagtagna sa gipaabot nga gusto og pagdugang sa mga angay na margin alang niya na nga serbisyo o uban ba. Og diri sa residual approach, it is the standalone selling price of the goods and services. It is a residual amount after deducting all the standalone selling prices of the other promised goods and services in the contract from the total transaction price. So it involves estimating the total transaction price less the sum of the other standalone selling prices of goods or services promised in the contract. Please take note pod na ang combination of methods may be used if two or more goods or services have highly variable or uncertain stand-alone selling price. Sa last nga step, step 5, recognize revenue when or as the entity satisfies a performance obligation. So dire, revenue is recognized when for as the entity satisfies a performance obligation. Revenue is measured at the amount of the transaction price allocated to the satisfied performance obligation. So, there is a final step. Mo-apply siya og new revenue recognition standard para i-recognize revenue when or as the performance obligation in the contract are satisfied. For performance obligations that are fulfilled at the point in time, revenue is recognized at the fulfillment of the performance obligation. O diri sa performance obligation satisfied over time, ang entity must decide how to appropriately measure the progress and completion of the performance obligation. Over time, or recognized over time, as the entity progresses towards the complete satisfaction of the obligation. While there is at the point of time, revenue from a performance obligation that is satisfied at the point of time is recognized when the performance obligation is satisfied under the following indicators of transfer of control. Since sumana na tatong sa 5 steps, dili na po ta sa measurement. So, measuring in the PFRS15 progress towards complete satisfaction of a performance obligation. So, during a part, revenue is recognized when as performance obligation are satisfied in the amount of transaction price allocated to satisfied performance obligations. So, a performance obligation is satisfied by transferring a promised good or services to a customer. A good service is transferred to a customer when they obtain control of that asset. So, an entity recognizes revenue for each performance obligation satisfied over time by measuring the progress towards the complete satisfaction of that performance obligation. Also, the entity uses a single method of measuring progress for each performance obligation satisfied over time and applied method to remeasure its progress at the end of each reporting period. Nanislay duha ka methods. So, ang una, output method. It is a direct measurement of the goods and services nga na-transfer to date relative to the remaining goods or services promised under the contract. For example, surveys of performance completed to date. So, diri sa output method, nakapokus siya sa direct value transferred to a customer. O gi-measure o tanan nga resulta nga achieved as a control of easily measured and observed goods or services are transferred compared to the total estimated outputs needed to complete the contract. So, there is a ikaduwang method or the input methods. Efforts or inputs expended relative to the total expected inputs needed to fully satisfy performance obligation. If efforts are expended evenly throughout the performance period, revenue may be recognized on a straight line basis. Dere, ang example ani niya kay costs incurred, resources consumed, labor hours expended, and machine hours used. And also, take note that a weakness of input method is that there may not be a direct relationship between an entity's inputs and transfer of control of an asset to a customer. Thus, the entity may need to adjust the inputs used in the measurement. Presentation. There is a PFRS15. A contract is presented in the statement of financial position as a contract liability or a contract asset when one of the contracting parties has performed. An unconditional right to consideration is presented separately as a receivable. So, generally, contract assets and contract liabilities are based on past performance. Whether to record a contract asset or a contract liability depends on which party acted first. For example, when a customer prepays, the receiving entity records a contract liability, an obligation that must be fulfilled to earn the prepaid consideration once the entity performs by entering goods or services to the customer. So, the entity makarecognize sa revenue and adjust ang mga liability downward. So, unsa din ang contract liability? So, it is an entity's obligation to transfer goods or services to a customer for which the entity has received consideration or the amount is due from the customer. It is recognized at the earlier of the date. The entity receives consideration before the goods or services is transferred to the customer or mo ni siya ang ginatawag nga advance payment. Ang kadua, the entity has unconditional right to consideration before the good or service is transferred to the customer. So, ang entidad or entity adunay walay kondisyon nga katungod sa pag-consider sa dili pa ang goods or services nga ibalhin sa customer. An entity's right to the consideration in exchange for goods and services that the entity has transferred to a customer when that right is conditioned on something other than passage of time. It is measured, assessed for impairment, presented, and disclosed in the accordance with PFRS 9. So, exclude the amounts recognized as a receivable. A contract asset is recognized when the goods or service is transferred to the customer before the consideration is received or become due. Gawas sa mga kantidad nga gila nga usa ka makadawat, ang usa ka asset sa kontrata gila kung ang goods or service gibalhin ngadto sa customer. Sa wala pa ang konsiderasyon madawat o mahimong due. So, unsa day meaning ani receivable diri sa pag-present sa PFRS 15? So, receivable is an entity's right to consideration that is unconditional. A right to consideration is unconditional if only the passage of time is required before payment of that consideration is due, even if the amount is subject to refund in the future. So, accounted for under the PFRS 9, on initial recognition, any difference between the measurement of the receivable in the accordance with PFRS 9 and the corresponding amount of revenue recognized is recognized as expense. So, ma-recognize siya sa expense. So, please note that PFRS 15 does not prohibit the use of alternative terms for contract asset and contract liability so long as sufficient information is provided to enable users of the financial statements to distinguish between receivables and contract assets. Disclosures. So, diri nga part sa PFRS 15, the disclosure objective stated na ang entity to disclose sufficient information to enable users of financial statements to understand the nature, amount, timing, and uncertainty of revenue and cash flows arising from contracts with customers. Therefore, an entity should disclose qualitative and quantitative information about all the following its contract with customers. The significant judgment and changes in judgments made in applying PFRS 15 to those contracts, and any assets recognized from the cost to obtain or fulfill a contract with a customer. Entities will need to consider the level of detail necessary to satisfy the disclosure objective and how much emphasis to place on each of the requirements. An entity should be aggregate or disaggregate disclosures to ensure that useful information is not obscured.